Happy New Year's, guys. Here is our $10,000 Robinhood wheel account. We're strictly doing the wheel strategy on this account. I want to see how quick, how slowly we can grow it. And I want to implement different wheel option play strategies. There's all sorts of different ways to do the wheel, and we've been experimenting with different ones. We started the wheel right here in October, so not too long ago. I want to give you a year recap. This is what happens when you're just kind of trading and trying to buy dips, and then this is pretty common, or much more of a fall off, a big cliff. If you're trying to always time the market, you don't have any idea what you're doing, and you don't stick to strategies. Best way is long-term shares. Hold them for a long time. Something you think you believe in, and something you use, and you think will be there for 10 years. This wheel account, I'm trying to do it a little more aggressive than just holding long-term shares. Theoretically, selling puts should be safer than holding shares. I'm not gonna get into all that. I'm gonna show you recap here. So right here, we started it. It was about 10 grand, and so far we're up on the year 6%. So in 3 months, we've come up 6%. This fluctuates a lot until options expire, so it's hard to really know where exactly. If these basically all expire worthless, which is what you want when you're doing selling premium, then this will probably be back up here quite a bit. So it dips because the share prices dip, and then the contracts you've sold gain value. So then if you want to buy it back, you'd have to pay more than basically you sold it for. But yeah, so it's hard to look at a wheel account too much and get a good idea until options expire. So like this day options expired, and then this was when options expired, and then you can kind of see. And then recently I just got into longer term options, more like a month instead of a week. Back here, when we started doing it, basically I was just selling puts on stocks that I'd want to keep in a long-term portfolio, and I was looking at lots of trends, and I was selling puts that were way out of the money. So basically not much premium and very, very safe. And then I got a little impatient with that right about here. Sold a put on a biotech company, and it was still far out of the money, but the thing dropped like 60% overnight, and that's this drop right here. We're still holding that. That's BCLI. So now we own the 100 shares. So that's why it's safe, because now we own the 100 shares. The option didn't expire worthless, and we're left with nothing. The option dropped way down. We got exercised. Now we own BCLI 100 shares. So basically we're riding this until it comes up. And then here, yeah, I quit. I know not to do risky biotech companies. You want high implied volatility. However, if it's a company you don't even know about, or penny stocks, I wouldn't mess with it. High IV is good. However, it's got to be something you think you're bullish on, at least for the next year or so. And then kind of was doing that through here. So still really safe strike prices on good companies with pretty high IV, ones that I think are good companies, not penny stocks. Mostly not biotech stocks. This was DraftKings, Rocket, a couple of EVs, which were a little bit sketchy. Probably shouldn't have done it. But we've made it out all right so far. And then right here, we started shooting up more aggressively. This is when I kind of changed the strategy a bit. So what I'm doing now, and you can see it's more volatile, but this I think is also because it's a longer term. What I'm doing here now, starting around here, was I was picking stocks that were the volatility actually not even as high. Could have been less volatility. However, it was companies I was more comfortable with, and then I was really just looking at the patterns and more trading it how I would on my trading account. This is just a wheel account. I have another account I trade with, and then I have a long-term account. This is my wheel account strategy. So this was more aggressive strike prices. So more aggressive would mean if, say, Lee is trading at $30, but I think it's at the very bottom at $30 and it's on its way up, I might sell a put at $29. Whereas before, in this range, I would see Lee, I'd see the pattern, and I'm thinking it's going to go up, but instead of selling a $29 or $28 strike for a put, I'd sell like a 25 or 24 just to be really safe, to try not to get exercised. So now I've kind of adjusted to sell a little more aggressive strike prices, just with a little more confidence in the direction. And then also how I've changed was around here, I started rolling over. So rolling over is basically, you can roll it over either if it goes against you or if it goes for you. So we just actually rolled over, which one was it? We actually rolled over this Lee, which I maybe shouldn't have. Okay, we'll see what happens. But basically, I had a $29 put that I sold on Lee. Lee Auto is a Chinese EV company. Right here, I sold it sometime here. The stock shot up, and then that put basically lost all its value, which is what you want. We had about 70% return on it, and so what I did is I bought that one back for the 20% left and sold the next one up. So the next one meaning not a 29 strike put, but a 30 strike put. So we got more premium. You can kind of maybe see it here somewhere. I'm not sure. So that was rolling up, because if it goes in your favor really well, you can roll up, or you can just close it out. If it's 70 or 80%, you've got a lot of time left. Here's our Rocket one. This one expires at the end of this week. This is actually selling a call. So if you're holding the share, then you sell calls on it. But if you have cash balance, then you're selling puts. So here's a Corsair. This was the first longer term one I did. When we opened this one up, it was about a month out expiration. I'm bullish on Corsair over the next 10 years. My strike was maybe somewhat aggressive. I'm not sure at the time when I opened it up. It wasn't too aggressive. However, I gave us a month of time. Quite a bit of premium on here because there was so much time. $258. And then the collateral is only $3,500 because it's a $35 strike. This is going up and down. When it was down here, this was a negative. And now that it's come up here, this is positive. And today's coming back up. So it's, well, actually, no, I'm sorry. This is the put we're looking at, the put price. So yeah, actually, that's exactly right. So when this put option was up here, was valuable, Corsair's strike price was down, right? So when it was down here, Corsair was higher strike price. So now this puts is losing value down here because Corsair Gaming right up here is up 3.5% today. So basically, we're gonna ride this thing out. $35 strike. We're kind of right in it. Kind of right at that support level. We're even almost a little aggressive on it. And looking at this play now, today looks, I'm happy with it just based on the indicators and stuff. But it could dip below that and then hopefully come back up. But if not, if come expiration on this one, I will roll it over probably down and out. So a lower strike or the same strike and just with more time. Because I think Corsair will be over $35 in the future. That's Corsair. Let's get back to this yearly chart. So I was kind of explaining what we were doing here. So yeah, more aggressive strikes here. This drop right here, I'm not too sure what this was from, honestly, just because these things fluctuate when you're holding them. We're really up here. I sold a put. It might be this Lee. Let's see the total return. Okay, so it's maybe this Corsair. This dropped right here because Corsair dropped, and this put gained value. So that could be this 66. This isn't a whole lot of money just because we're not making a lot of money with the wheel account. That's the point of the wheel. You don't make a lot, but it's safe money. So your recap on it, we're up. I mean, really, it's the 3 months because we didn't do it before then. We're up 6% in the last 3 months. 6.2, and I mean that's just a snapshot of right now. I think at the end of the week it'll probably be more like 7%. Not bad. I'm down with 2% a month. I was trying to do like more 1.5% a week, and maybe we're doing that. It's just hard to see on just little snapshots. See, like this week right now it's showing 1.8. But yeah, it's good at the end of the year to kind of look back and see how you're doing. Took 10,000, made it a safe 10,600 in 3 months. If we can keep up the 6% every 3 months, though, that's really not bad. That's 2% a month, so that's 24% a year. That's pretty good. And as we keep going with this account, I'm going to keep developing kind of my wheel strategy and how I want to execute it. So now, as you see, I'm doing some with longer expirations. I'm doing a little more aggressive strike prices, and then I'm just watching the patterns and picking it when I think it's going to go up. But yeah, let's look at this Wish one. The Wish came up today at one point. Yeah, we're still negative on this. This doesn't expire for another 10 days, though. That's next Friday. So this one was a little bit more risky. There's a recent IPO. Sometimes IPOs can be pretty volatile. And then the strike on this one's $20. So yeah, we'll see. So it kind of just kept coming down here. It's below even the IPO right now, just below it. So $20 is aggressive. It is trending up now, though. Higher highs, higher lows. We'll see if it bounces off this 180 right here, this yellow line, 180 moving average, or if it kind of breaks on through. But yeah, we've got time on this one, so we're doing all right. That was an IPO. So our buying power, basically, you don't really have to manage the wheel strategy, especially if you have longer contracts. This rocket, like I said, we own 100 shares of this at $21 strike price. It's been floating around $21. Rocket was a pretty good one because this chart is so predictable right now. You're basically just waiting for a breakout. So if you look here, I've got trend lines that I've drawn. IPO'd, shot way up, had bad earnings, plummeted, came up here, found a resistance, came down here for a lower support of this one right here, as you see. Came up lower high, so that means it's trending down. And then at this one, at this low, it found a support right here at this support back here. Okay, and then this support, or this resistance up here. See this, found resistance right here, right where this one was. So now it's consolidating in a tighter range. So now my prediction is it's maybe going to keep going down a little bit today, but it's found its support. It's probably going to reverse and go up. So when I'm trading it more aggressively on a trading account, I would maybe buy calls or shares or whatever to catch a swing trade. I would wait until there's momentum and you see that it's going. It's possible it can just keep going down for sure and find support down here. You know, who knows? Stock can always go to zero. But so far it's trending down, and then here it's been consolidating. So this consolidation, one of these times it's going to break out going up or going down. And I think it's probably going to bounce off this support. We'll really know, maybe by the end of today we'll know if it's finding support there, or tomorrow. But I'd say definitely by the end of the week we will see, okay, Rocket Mortgage is going to keep going down, or Rocket Mortgage found a support here, or it might even find a support down here at 1954. This line's a little high. It could be down here a little bit. So yeah, somewhere right around there. Anyways, yeah, so this one's been kind of a fun one. So down here you could sell a put, and you could be at an aggressive strike price like 19.5 maybe, if you think, okay, it's found a support. But that's kind of how I'm going to be doing this one in this year 2021 so far, and we'll see. And then my other thing I'm excited about with the wheel account is I might be putting in quite a bit of money into the stock market with another account, and with that one I will initially, my plan is to just sell puts on SPY. SPY has 3 expirations a week, and so you can collect a lot of premium throughout the week. And what I've done, I've started to paper trade it, which is basically a simulator, until maybe we put the money in, and I'll see, you know, I'll say, okay, I've got this track record of 2 weeks, 3 weeks, a month, 2 months, whatever, and this is what we made. So here we go. Here's the paper account. So this paper account starts with 100,000, and we've been trading on it for, I think, a week and a half, and we've made, yeah, it's been almost 2 weeks. It was over the holidays, so it's kind of short trading days and cutoff days and all that. But basically, it looks like we're going to be able to make about $1,000 a week. Given it won't be every week, but roughly $1,000 a week with this strategy with $100,000, and that is just selling puts on the SPY. So it's the wheel, but it's keeping it simple just with the SPY with the same expiration or close. So you can't do year to date it's January 1st, so it's not giving me, I don't know how to go back a year, but yeah, basically we started, this paper account starts at 100,000. You can see it's at 102. Oh, you can't even see that over there. Dude, hold on. There. Okay, see. Stop it. Okay. Just go a little bit smaller. There. You can see here. So it starts at 100,000. It's now at 102 at $1,017. So yeah, that's basically what we made in the last roughly 2 weeks, but through the holidays again, it's been kind of weird. But then today I'm waiting to, oh, here we go. You can see the last 30 days. There you go. That kind of helps. So selling puts on this one, I'm being more strict. I am kind of waiting in the day for the SPY to kind of have a low. So I wasn't on the computer here, but I would have maybe sold it right here on these big red candles. We'll see how the day shakes out, and then I'll sell a put that expires tomorrow, and hopefully I'll sell it on a low, and then I'm going to sell it. What I've been doing, as you see here, I'm going to sell it when it's it'll be January 6th, which is tomorrow. It's the 5th. I would sell it with about a 20 delta, 0.20 delta. So if I'm bullish on it, thinking SPY is going to go up tomorrow, which I am, let's see how this candle closes actually. I might be bullish. If I'm bullish on it, basically it'll be 0.20 or higher, but not, as close as I can be to 0.20. So it'd maybe be this 364. If I'm bearish, I think it's going to keep going down. I'll still sell a put, but it'll be 0.2 or lower. So it'll be this one. And here's the delta on here. This 0.18, 0.21. So basically, I'll just set it up so you can see. So right now, I would sell it here. I do trade, do sell, and I just do as many as I can on this account. It's a paper account, and this is probably what I'll be doing. So I think it's like 12 I can sell. Okay, so wow, that's a crazy amount. Look, 1100 just for that one. I'm doing something wrong. Okay, so I can't sell that many. That makes more sense. 11. Events fish. Why is it telling you that? Huh? Maybe because the SPY's high. I'm not sure. 5. Something's not settled. There's a paper account though. View balances. The paper account's actually been kind of weird. Sometimes it'll say, oh, you've got orders that are out that have been filled, but basically I should be able to sell 11 of them. That'd be $1,000 on this one. So we'll see. And then basically if the SPY stays above 364 by close tomorrow, which is right here, then we'll keep that premium and we'll move on. Towards the end of the day when it closes, whoops, wrong one. Towards the end of the day when it closes, I close it out. I buy to close for 1 penny on all of them, because they can also exercise you after hours if the SPY happens to go in the wrong direction. So that's why I close it out early. This is this wheel account on this 10K Robinhood, and then this paper trade one might become real pretty soon here, which would be cool. Anyways, guys, if you want to follow along, make sure to sub up, like up, comment down, make your money happy money, so stick around, and I will be back with you tomorrow probably to tell you, give you more breakdown what's going on here, kind of recap this a couple times a week. Okay, peace out.